Hey everyone, welcome back to my channel. My name is Vitaly. I'm learning trader and investor. I started a new portfolio almost 5 months ago, and also I'm learning to trade. I will be sharing all information transparently, my wins, my losses. So if you're interested, hit like, subscribe, and let's continue. Today we will be talking about Adobe, a stock that used to be a market darling but is now getting destroyed. While AI hype is sending many tech stocks higher, Adobe share price is down heavily from its highs and trading near multi-year lows. A lot of investors are scared that AI and tools like Canva and Figma are eating into Adobe's moat and its future growth. In this video, I want to cut through that noise and look at the Adobe the way a long-term investor should. We'll quickly break down what Adobe actually does. We'll take a look into the balance sheet, what are the analyst expectations, the future growth, and so on. I will also share my own expectations and price target, and we also will take a look into the Adobe from the different point of view. I'll also share my own opinion, my expectations, and my price target about Adobe. And we'll also talk about something that really matters for creative. Is Adobe full ecosystem actually worth the money? We will compare to the different softwares if we will buy them separately, if it's really worth to leave Adobe ecosystem. By the net invested capital, Adobe is the third position for me. And by the end of the video, I will be sharing, is this still a buy for me or will I be adding into this position? So as always, let's start from the income statement. As you see, from 2014 up to 2024, Adobe was always positive in the growth. Yes, sometimes it was slower, sometimes it was faster, but it always was double digit growth, which is really great for this huge company. And if you see, currently, even if the year is not ended yet, they are already above the last year numbers. Net income is not so stable as the revenue growth. Sometimes they had like negative growth, as you see in few years, but overall they're growing very nice. And this year they already earned more than last year. So this year the growth will be over 10%, I would say. And what I love about Adobe, if we will take a look about the diluted shares outstanding, we will see that they are buying back stocks very massively. And that's good, especially now when they are very cheap. So that just means that if you invested, for example, $100 before, you earn bigger share of the company. If we will take a look into the balance sheet and we'll compare total assets versus total liabilities, we see that they have much higher assets than liabilities. What I don't like, though, that the liabilities last year were growing much faster than the assets. And if we will take into the cash flow, we see that each year they were growing very fast in the free cash flow, except last year, because they were investing into AI a lot. But as you see, last year free cash flow, they are over than the 2022. And this year, even if the year is not finished yet, they are over the number here. So it's really great, I would say. And with free cash flow, they can invest into the company, they can buy back shares, and so on and so on. Yeah. So overall statements overview, I love it. The only thing I don't like that the liability started to grow faster, but hopefully they will slow down again. We will see. We cannot predict the future. Yeah. So now let's take a look into valuation metrics. And for the company which is growing in double digits and this size, 20 PE is really cheap. And this is definitely connected with the risks of AI. The investors are afraid of it. But for now, I see that numbers are much better than the year ago. I don't see this risk actually, for now at least. And if you know, Adobe invested into the AI a long time ago and they have their Firefly. It's not probably the best AI, but it's still really good and it helps a lot, at least in the Photoshop for me. The forward P is almost 14. It's just ridiculously cheap. Even if there is a risk that Canva or Figma or AI will replace it by numbers, I don't see it yet. And for now, I don't see any risk, at least this and next year. Maybe later, but just remember that Adobe is investing into AI as well, and they will probably have their own solution. So forward P, really great for Adobe. So it's really a buy from this point of view, at least. Price to free cash flow is 15. The market median is 2025. So it's really a great number for the growing company. If the company wouldn't be growing, they try to secure themselves, but they are growing and they have price to free cash flow in 15s, 14s, it's really cheap. If we will take a look into the EPS next year, it's 12 and 3. It's really not bad for the software company, which is not growing rapidly. They're growing kind of fast, but not very fast. And EPS next 5 years is higher than the next year only. So they are expecting to increase the speed of the growth. Gross margin is 88%. 88%. It's really good for the even for the software company, it's really high. And profit margin is over 30%. So the numbers are really great. I cannot complain at all, to be honest. So let's talk about pros and cons of Adobe. What I think that Adobe really has a deep, sticky ecosystem. Adobe offers the most complete pro ecosystem across photo, vector, video, motion, print, PDF, and so on and so on. While Figma, for example, is a competitor, it focuses on the UX UI more, and Canva is on the quick marketing content. Figma definitely, it's not comparable to Adobe XD, which they even closed because of the Figma. The competition is really fierce here. But Figma do not close the niches where Adobe is really good. For example, Photoshop, yeah. There are good competitors in the separate niches, but as a designer myself, I use Figma, for example, I use Adobe too. If someone uses Figma, it doesn't mean he doesn't use any Adobe products. And first of all, if you want to buy all separate products from not Adobe family for the whole niches, for example, like vector, video, or motion, if you will buy all them together separately, you will definitely pay more than the Adobe subscription. So that's why it's really a good value for the money. For example, you are buying multiple tools not from the Adobe family like Rive, CapCut, some photo editing tool, maybe some UI design as well, like something instead of Illustrator. You will pay much more usually. Also, about stickiness, agencies, studios, and large enterprises have built their workflows around Adobe, which creates high switching costs and make it painful and risky to move away fully. And multiple businesses which are working with the agencies are used to the Adobe tools as well. And sometimes they have their preferences to the Adobe. The next point is high margins and strong cash generation. So the subscription software model gives Adobe high gross margin and strong free cash flow, which supports continuous investment in AI features and ongoing share buybacks. Also, the free cash flow cushion helps the company absorb some growth slowdown or pricing pressure for the new competitors. And remember, they are always buying back shares in the huge amounts. So I see AI more as an opportunity than a risk. Of course, it has their own risks, but Adobe is rolling out Firefly, Acrobat AI Assistant, and other AI tools across the suite with the billions of AI generated assets, and many users are already engaging with them. For me, I'm not using all Adobe products, but I'm using Photoshop and Illustrator, and AI helps a lot. It's a really great tool which helps you a lot. Sometimes it makes dummy things, but it is really not so bad as some designers are telling him. So, if Adobe will be able to successfully charge for AI features and integrate them deeply into the workflows, AI could add hundreds of millions for new recurring revenue over the next few years. For example, if we will take Firefly, it's not the best tool for the image generation. It's very medium, I would say. But the good thing is it's trained on Adobe stock and licensed public content that you will not breach any laws or copyright issues. As an example, I was trying Midjourney to make a Pikachu image, and it was making a Pikachu. And you basically cannot use this image everywhere. But when I prompted the Firefly and asked him to make a Pikachu, he made something similar to this Pokemon, but it wasn't Pikachu. It can be an issue when you want something very specific, but at least you will be safe from the point of copywriting. So another point is wide economic mode, and independent analysis still describe Adobe's economic mode as wide, based on brand strength, ecosystem, and high switching costs. And still, Adobe is not going anywhere. It still has demand in their niche. So why Adobe over Figma or Canva? As an example, it's just two competitors. I know that they have more. Figma and Canva are fantastic products. I use them a lot, especially as a UX UI designer. I use Figma all the time. But Figma's niche is for UX and UI mostly, and Canva is for the simple marketing content. but Adobe remains the full production house for photography, film, motion, print, and enterprise grade workflows. So, for the long term investors, owning the company that controls the premium, high budget end of the market, not just for the beginner segment, is a big advantage, in my opinion. Let's talk about the constant risks now. AI and competition pressure. So Figma and Canva are growing rapidly, and like Figma are taking the users for the UX UI, and they definitely won with them. Adobe wanted to buy Figma before because Adobe XD was much worse. But Canva is taking the pie from non-professional users. And some analysts even call AI as existential threat if Adobe fails to adapt quickly enough. I would say they are adapting, maybe not everywhere, but they are doing a lot of things to help designers to make a good quality thing. With AI software, you can make a lot of things, but it's really difficult to make very specific thing you want. The next point is growth slowdown and investor sentiment. Adobe still grows revenue around low double digits, but that is slower than its historical pace. And some investors see that the growth will be slowing down. But from the balance sheet we evaluated just before, we saw that probably the growth will be faster than last year. So who knows? The stock has underperformed broader tech indices in 2025, and the investors see a big risk in that. But even if Adobe is growing slower, it's still growing and it's still double digits. So I don't see a huge risk in that, especially now with that prices. If it will be premium valuated, I would say yes, there is a high risk. But now it's really cheap for this company, in my opinion. And the last point is execution and valuation risk. Even at lower multiple, investors are still paying for premium high margin brand. If AI monetization disappoints or margin compress, Adobe stock could remain cheap for a long time. Even at lower multiple, investors are still paying for a premium high margin brand. If AI monetization disappoints or margin compress, Adobe stock could remain cheap for a long time. And that's true, and I'm accepting these risks. Even if it will disappoint, I don't believe it will be going lower because now the valuation is ridiculously cheap, in my opinion. So now let's take a look what analysts think. So the analyst consensus is moderate buy. The price value is between 590 and 375. And the current price is 322. So the lowest estimate is 375. So I believe I will still be in profit probably. Yeah, and my to be honest, my valuation is very similar. My valuation is between 450 and 470. So, in my personal opinion, I'm still buying Adobe. I will be adding more to my portfolio for the long term position. I'm accepting the AI noise, and I believe that Adobe will be just fine. Maybe the growth will slow a bit down, but it's still a great company with a great future, I think. So, for the quick recap, we saw that Adobe is a high quality creative software leading some AI and competition risks, but it also trading at one its cheapest valuation in years. So, as mentioned before, my conclusion is Adobe is a buy for me, and I will be adding it more to my portfolio. So, what do you think? Is Adobe a broken company or is just a broken stock? If you liked the video, hit like, subscribe, and see you in the next episode. Keep growing.